Nifty. Anirudh Garg from INVasset PMS is now with us on the show. Anirudh, I remember our last conversation, you were very, very cautious in the markets. You had, liquidated all your holdings and you were 100% in cash. It's since then, it's not that things have recovered. We're down 12% from our peak levels. How would you approach the market now? Because we've spent some time correcting and we've seen a bit of a price correction too. I think you're on mute.
Oh, sorry. Okay. So thank you for having me. A very good morning to all the viewers of CNBC TV18. Yeah, we have been, as you rightly said, we have been sitting for cash for quite a long period of time, and I think the status quo still remains. We are still sitting on cash, though we see a lot of interesting opportunities now arising, especially today. And yes, but we still feel that there is a little bit more pain to go. I think this market has transformed its, way of functioning all the way from June 2022 to, we can say, end September or October 2024. We were seeing a market which was, buy on dips. And I believe now this market has transformed into sell on rises. And I think the valuation and the growth prospects in the market are still not supporting the valuations out there.
How much lower at an index level do we need to go for you to be more comfortable at a headline in the broader sense?
See, I believe at least sub 22K is where we should look at the indexes. And all these indexes the Nifty mid cap, small cap, even the Nifty, they have a tendency to approach 500-day moving averages, be it simple or exponential during a bull market correction. And we clearly are in a bull market correction. We may have periods where we may rise, but I believe, as I said earlier, all these rises should be an opportunity to book profits of. We have earned wonderful profits in the last 2 years. And somewhere this correction, you can, relook at your stocks wherever the excesses are. You can shift to those stocks where, the valuation is now in a comfort zone, or, you expect them to be in comfort zone. The valuations, where the valuations are higher, you can just wait a bit, not jump into the momentum that is going on into the market.
Anirudh, we got that point. Anirudh, help us sift through, various sectors. Where is it that you continue to see excessive valuation? And like you mentioned at the start, today especially, you do see a few pockets of opportunity. So which are the sectors you like currently, and which are the sectors that you will continue to avoid?
See, if we look at the overall context, we are seeing economic slowdown in India. So whenever this happens, the worst hit are the financial institutions. That is clearly being reflected in the bank Nifty. Now, the big boys, HDFCs and the Kotaks and all, are somewhere we believe that the earliest shoots of recovery should come from, because these are the people who do the good lending. And whenever the economy recovers, these will be the people who will, lead the recovery. So going forward, some value is seen in this sector. Also, I believe you have to look at from the other point of view, where the sectors which are okay but were highly inflated, something like say maybe a Zomato, or something like say a Dixon Technologies. All these sectors which are the new age sectors of India, which are I connect them to the consumer side of it, and very expensive. Somewhere the correction has started in these names as well. And I believe a good opportunity in coming times in the next couple of months should be seen in such stocks. They had become the darlings of the market, and now they are due for their rightful correction. So you have to make sure that you have a balance of both stocks which are expensive but are the stocks which are growing. On the other hand, stocks which are fundamentally very strong but did not perform that well. So yeah, these are the sectors that we are looking at.
But would you go out there and buy a Dixon, a Zomato, a Swiggy, a Paytm after the correction, or would you wait for lower levels?
I believe we would start nibbling into something like a Zomato, if that is the right way to say it. And still, I believe the valuations at something like a Dixon Technologies are very, very high. And I think there'll be more negative surprises than positive going forward. So we are still waiting for them to correct.
How do you like the metals and mining space in the current scenario, especially given the kind of a cool off that the dollar index saw? Do you think that's one particular space that investors can once again look at?
I think it's too early for us to, say that the dollar index has topped out. I personally, I do not believe so. I think whatever rally a little bit, if we can say that, or a dead cat bounce, if we can say that, is happening in metals is just because of the China growth that has come in. The dollar index, I still believe, is in a dangerous territory, and one should keep a very, very close watch at it. I think nothing has changed. Things will take some time. Just Donald Trump swearing in does not change anything in the market. The US inflation problem is still there. He recognized it yesterday in his inaugural speech as well. And out of every, I believe all the UN cry out there, the reality is the US inflation and the lack of global growth. This is something that you will have to, fight out in the real world. Rest all is like a Bollywood film where you're talking too much and not delivering that much, is what I could make out of Donald Trump's speech yesterday. So the US inflation is still a problem, and until this US inflation problem solves, I don't think that the dollar index is gonna come down. We see higher levels for the dollar index, and then automatically lower levels for developing market equity indexes.
Anirudh, thank you very much for joining in. Day one of the Trump administration, and already unpredictability and volatility is evident in our markets. The mid-cap index has recovered. The mid-cap index was down 1.7% when we started the show. It's now down 1%, but still under pressure. Its names like Paytm managed to recover 4.5% from the day's low. RBL Bank is now back in the green. And then some of the PSUs like Kutco, RVNL, SAIL, have seen a little bit of buying in the last 10-15 minutes, but it's back in the green now for the Nifty and the Sensex. A very sharp recovery seen in the last 10-15 minutes. Don't go anywhere. On the other side of the short break is Halftime Report.